Okay, we're going to look at a multi-product break-even point now. So the break-even point, remember the break-even point formula itself is my fixed cost divided by my price minus my variable cost per unit. And that still holds true with multi-product. The issue with multi-product is I need to figure out how much, each product might have a different variable cost, generally it would, and also generally a different price. Then I also need to figure out on average how many I sell of each one. So for example, this one says, suppose that Head First company now sells both bicycle helmets and motorcycle helmets. So let's just start a table here. Motorcycle, bicycle, we'll put on top. Bicycle helmets and motorcycle helmets. Both bicycle helmets and motorcycle helmets. And the helmets are priced at $75. So sales price is $75. Bicycle helmets are $75. The variable cost bicycle helmet is $45. And motorcycle helmets are priced at $220, and the variable costs are $140 each. And it goes on to say the total fixed cost of Head First. Total fixed cost Head First is $58,900. Okay, $58,900. And it says next year they expect to sell 5,000 bicycle helmets and 2,000 motorcycle helmets. Form a package of bicycle helmets based on the sales mix for the coming year. Okay, so what it's asking you to do for number one is just to kind of show you how the package idea works. Is that when we have something like this, where we have 5,000 and 2,000, 5,000 bicycle helmets and 2,000 motorcycle helmets, we're looking at a ratio. So this ratio, in this case, the ratio is technically the full ratio is 5,000 to 2,000. We can break that down further. Effectively, for this one, we could take all three zeros off and say this is a 5 to 2 ratio. So the smallest 5 to 2 ratio. So the smallest package we can have is a total package of 7 units. 5, and because we only use whole units, so 5 units of the bicycle helmet and 2 units of the motorcycle helmet. But really, we could form packages in any amount that is a multiple of those. So it could be 10. So it could be 10 and 4. That would be another one, another option. It could be 15 and 6. It could be 30 and let's see, we'll do 15 and 6. This would be 14 units, 21 units, and so on. That's one package. Okay, so every package is a group of them, making sure that we maintain the ratio of 5,000, 2,000, or in this case, a 5 to 2 ratio. And why that's important, why we need to find the package first, is because what we're going to find is our step in between these two, between 1 and 2, is to find the contribution margin for a package for a group of 7 units. And then we're going to use that to actually find our break-even point in packages. And once we find our break-even point in packages, then we can find our break-even point on each one individually. So first things first, let's find out our unit contribution margin, which remember is just the same as price minus variable cost. So I'm just going to take price minus variable cost for both of these. And then the next thing I'm going to do is I'm going to multiply these by the sales mix. And the reason for that is because we don't want to have partial units, or at least avoid it if we can. Then we want to keep 7 units as our bare minimum. So my assumption is kind of the fewest in group that I can sell, package is what we call it in this book, but the fewest or smallest group that I can sell is a group of 7. So if I sold 7 units, any 7 units, assuming that I stick to this ratio, that means in those 7 units, there'll be 5 bicycle helmets and 2 motorcycle helmets, which means I can get a contribution margin for the, so this is going to be the package unit contribution margin. And then this down here is going to be the total package contribution margin. So to find this, I'm simply going to take the unit contribution margin. So each one makes me $30, but the smallest I can sell in is groups of 5 in this case. And same thing, I'll take 80 times 2, and then I'm going to get a total of 310. So that's my total package contribution margin. So now what I can find, that's step 1. Okay, so step 1 is to, I guess technically step 1 I'd call finding the ratio. Then I have to find the ratio. So step 1 is find the ratio. Step 2, I would label as finding the total package contribution margin. Step 3 is to find the break-even point in packages, not in units, but in packages. So I know what my contribution margin is, and my break-even point, remember, break-even point, you could also write this way, fixed cost divided by contribution margin, because price minus variable cost per unit is contribution margin. I should say contribution margin per unit. So I can find my break-even point in packages. That's my step 3. And all I'm going to need to do is take my contribution margin for the package and take my fixed cost divided by that. So take my fixed cost, 58.9, divided by 310 to get 190. Now this is not my end answer. This is 190 packages. So this is where making sure we label things well is a good idea. So 190 packages is my break-even point. But in those packages, remember the smallest we could use in this case because of our ratio was 7 units. So that's not 190 units. That's 190 packages of 7. So the total units is actually 7 times that. But I don't just want to know the total units. I want to know how many bicycle helmets I'm going to sell and how many motorcycle helmets I'm going to sell. So all I need to do is break that back out. And this is my step 4, is break the packages back out to their respective products. So I can take my 190 times my sales mix. Actually, I'm going to do this a little differently. Put my 190 down here for my packages. I'm going to put 190 here as well. And I'm going to say the sales mix, I'm going to put here. Actually, sorry, changing my formatting up here. So packages, break-even point of bicycle helmets and motorcycle helmets. My sales mix is 5 and 2. So my break-even point is I would sell, to break even, I need to sell 950 bicycle helmets and 380 motorcycle helmets. And that maintains my 5-to-2 ratio. And that should be how many I need to sell. And we can create we could create an income statement from this. And all we would need to do is we need to figure out our sales at break even. So my sales is going to be 950 times, I got 2 of them to do here, equals 950 times the sales price for the bicycle helmets plus 380 times selling price for the motorcycle helmets, my total sales. Variable cost, I'm gonna do pretty much the same thing, except for it's gonna be the cost side, not the revenue side. So I'm gonna take my 950 times 45 plus 380 times 140. Okay, so I got my sales and I have my variable costs, and now I can find my contribution margin. Now, if we've done this correctly, we can should be able to kind of tell where this is going. But if I've done this correctly, then my contribution margin should equal my fixed cost, because that will create my operating income. It will leave my operating income at 0. So my contribution margin minus my, my sales minus my variable cost, and then my fixed cost is 58.9. So I am at the break-even point with an operating income of 0 when I sell 190 packages. But the real answer here, so the real answer to number 2, calculate the break-even point in units or bicycle helmets and motorcycles. The answer is 950 and 380. And then it says check your answer by preparing contribution margin income statement. That's what we just did right here. So our answer is correct.